2022 has reached its end. Rampant inflation followed by the Federal Reserve's aggressive interest rate hikes made 2022 a brutal year for stocks. The S&P 500 is down around 20% year to date. But now that the year has finally reached its end, it's time to rethink and redo investment strategies not just for 2023 but even beyond. 2022 might be over, but the market is still under some dark clouds and recession is still a possibility. The S&P 500 is in its longest bear market in 13 years, with no clear sight of a bull market yet. However, this index of top large-cap stocks is still an excellent place to make a bet for the long term, even when the near-term prospects aren't that merry. Here we have compiled a list of the top 5 S&P 500 stocks to buy for the first half of 2023 and beyond. First in line is a leading supplier of microinverter-based solar and battery systems in the world, Ephase Energy Incorporated. Trading under the ticker symbol ENPH, the company is based in the US. It has revolutionized the solar industry by pioneering a semiconductor-based microinverter, which converts energy at the individual solar module level. Ephase has been working on its steady expansion in Europe in 2022. Moreover, the company has also been making acquisitions to help boost its long-term growth. In recent months, Ephase launched its IQ8 microinverters in France and the Netherlands, marking the first expansion into international markets. The company plans to expand its manufacturing capacity with its partner Flex in Romania at the beginning of 2023. Additionally, the company has also been expanding its business within the US as well, with the latest string of microinverter deployment expansions in Colorado, Florida, and Northern California in December 2022. Moreover, for the third quarter of 2022, the company posted excellent financial results. The quarterly revenue came at $634.7 million with a nice increase of 20% year-over-year, surpassing the consensus estimates. The revenue surged by a massive 81% over the third quarter of 2021. Further, the earnings per share also exceeded the consensus estimates, coming at $1.25 against the expected $1.07. Ephase ended the quarter with cash and cash equivalents of $1.42 billion. Free cash flow from operations was $188 million in the quarter. All in all, Ephase Energy is a stock worth adding to your portfolio in the first half of 2023 and beyond. Next in line is a medical technology stock DexCom Incorporated, which is represented by the ticker symbol DXCM. Based in the US, DexCom is a leading developer and manufacturer of continuous glucose monitoring devices in the world. The established leader in the diabetic care space has a history of over 3 decades. Its product demand is not only consistent, but growing continuously as the CGM industry's global addressable market is anticipated to reach $10 billion by 2030, from $5 billion in 2022. The company has a massive market share of close to half in the space, and has the ability to expand it further. DexCom boasts a strong product portfolio with further advancements being marked continuously. Earlier in December 2022, the company received FDA approval for its G7 CGM, the latest generation of its flagship product. It is 60% smaller than the G6, and comes with an unrivaled warm-up time against any CGM sold commercially. The G7 is expected to be launched in the US in the early part of 2023, while product launches are already underway across the UK, Europe, and Asia. The company has been showing strong financial performance as well, with the latest quarterly revenue increasing by 18% year-over-year. The revenue grew by 20% on a reported basis to $769.6 million. The non-GAAP operating income in the quarter grew by 190 basis points, to $160.8 million. The quarterly earnings per share came at 28 cents against the comparable 22 cents. Analysts are expecting average annual revenue growth of over 30% over the next 5 years for the company, thus making DexCom a wonderful stock to buy early in 2023 and hold for the long term. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Moving on to the next stock, we have the American pharmaceutical company, Eli Lilly and Company, which trades under the ticker symbol, LLY. This healthcare behemoth has offices in 18 countries with products being sold in around 125 countries. Eli Lilly has been one of the hottest healthcare stocks of 2022, but that does not mean shares will cool down anytime soon. There is much development happening in its pipeline with as many as 5 treatments anticipated to launch next year. The upcoming product launches are expected to drive revenue growth through the decade, as the company bets on multi-billion-dollar markets for treating obesity and Alzheimer's disease. Upcoming submissions also include potential with its star diabetes type 2 drug as a treatment for obesity. If the company obtains regulatory approval to market Mounjaro for this use, it could translate into peak annual sales of $25 billion, according to analysts at UBS. In the third quarter of 2022, the pharma giant came out with revenues of $6.94 billion, with revenues in the US increasing by 11%. The non-GAAP operating income increased by 6% to $2.01 billion in the quarter. For the upcoming year, the company expects revenue between $30.3 billion and $30.8 billion, with an EPS of $8.10 to $8.30 on a non-GAAP basis. Additionally, Eli Lilly also announced a 5th consecutive annual dividend increase of 15% for 2023, adding more to its confidence in the company's outlook. Hence, Eli Lilly is also a great stock worth buying for 2023 and beyond. Coming next in line is the global digital platform engineering and software development services provider, EPAM Systems Incorporated, trading under the ticker symbol, EPAM. This global IT consulting firm is based in the US. It ensures seamless experiences for clients across various industries. Just earlier this month, the company was named a leader in Nelson Hall's 2022 NEAT evaluation for overall Salesforce services. 2022 had been an extremely tough year for the company, as the Russian invasion of Ukraine put its smooth operations in jeopardy. EPAM relied heavily on countries from the former Soviet Union, particularly Ukraine, Russia, and Belarus. Thus, the stock suffered a massive decline of 50% in the 2 weeks following the launch of the conflict. However, the company was quick to relocate engineers away from Russia and ramp up hiring in countries like India. Thus, the company fought the odds bravely, and came out with impressive numbers in the third quarter of 2022. The quarterly revenue jumped up by 24.1% year-over-year to $1.227 billion, coming well above the expected. The non-GAAP earnings per share improved by 28.1% to $3.10, surpassing the expected EPS of $2.52. For the fourth quarter, the company expects EPS of $2.62 to $2.70 on revenues of $1.220 billion to $1.230 billion. Analysts are expecting an EPS of $2.61 on revenues of $1.27 billion. Given its persistence even in the face of adversary and its strong fundamental and financial growth, EPAM is also a great S&P 500 stock worth considering for the first half of 2023 and beyond. The final stock on our list for today is one of the biggest insurance companies in the US and a household name, Aflac Incorporated. Represented by the ticker symbol, AFL, is a supplemental insurance company that is well placed to benefit from the inelasticity of the insurance business. It offers various accident, short-term disability, long-term care and disability, term and whole life insurance products in the US and Japan. Additionally, the company recently announced a joint venture with Trupanion, Aflac Pet Insurance in Japan. Pending necessary regulatory approvals, the JV will offer high-value pet medical insurance in the second half of 2023. The insurance giant has a strong capital management strategy in place, and has the ability to consistently navigate uncertain economic environments. It has surpassed earnings estimates in each of the recent 4 quarters, with the latest quarterly earnings also exceeding expectations. In the third quarter of 2022, its net earnings came at $1.6 billion, or $2.53 per share. The quarterly revenues were $4.82 billion, also above the expected. Additionally, the insurance giant also pays a dividend, and has increased its dividend for 39 consecutive years. The latest increase is set to happen on March 1, 2023, which will translate into a yield of 2.4% for the company. The company also has strong investment-grade credit ratings. Altogether, Aflac is also a stock worth considering for 2023 and beyond. That's all for this video. We hope the information we provided in this video has been helpful to you in deciding on the next picks for your portfolio. We would love to hear your remarks or suggestion about our list in the comments section below. And if you want to gain further deep insight into different stocks and the investment strategies they are best fit for, please visit our website, stockstelegraph.com.